Dudes, duduses, and doofuses. Maybe I'm the doofus in this hat. Don't mind it. No, I'm not a stripper, like some people I know, certainly in our Congress. Just joking. But we're going to talk about the full Monty, stripping away the fundamentals of commodity trading in volatile markets like natural gas, grains, and coffee making new highs as well as cocoa. What's going on? Full report here. So first of all, La Nina is not going to form. The European model, the American model, all the models that meteorologists and other commodity analysts use, we're going for La Nina months ago. Never happened, folks. Look how the warming at Nina 3.4 is supposed to go back to a neutral category by the winter, early spring. It's actually a neutral El Nino now. Look at that, where I point to Nina 1.2 is actually warmer than normal. So what are going to be the implications the next few months for global commodities? We out-forecasted these models because of record warm oceans. We didn't think we'd see a cooling effect toward La Nina months ago. And with that, we updated our forecast on Sunday evening to clients. Initially, natural gas prices soared. We'll talk about that in a minute. Based on El Nino neutral and other things going on with warming over the Arctic aloft, this is the forecast for December. But is it enough to really create a major bull market in natural gas? We have to eat in the supplies. We had a psychological rally of 10 to 15% Tuesday through Thursday before a Friday sell-off because the market got too far ahead of itself given big production. So normally this 2013 analog, that's an El Nino neutral phase, would result, like in 2013-14, a bull market in corn and soybeans. Look at soybeans there over my shoulder, rallying about 10 to 20% during late November through December and early January of 2013-14. And it got dry in Argentina. They were in red. That's not going to happen this year, folks. And I'll talk about that why in a second. The weaker dollar back then, the strong Chinese demand, the drought in Argentina, all resulted in a bull market in soybeans. So we like the 2013 analog for a cold northern hemisphere, particularly the United States winter. Lots of snow, cold. But the one big difference is the warming at Nina 1.2 there. Otherwise, 2013 would have been a situation like this with drought in Argentina the next 6 weeks. Don't think it's going to happen. The warming at Nina 1.2 means we have an El Nino neutral phenomenon. And look at the wet weather there for the month of December in Argentina. Now, if you look at the commitment of traders, people are short soybean oil, some of the grain markets, definitely subject to short covering, but the dollar stays strong. We have a record South American crop. I don't see bean prices rallying more than 3 to 5% from here and could drop 10% by the March-April timeframe. Coffee, sugar, and cocoa, record long positions. 94% of specs long the market. 84% long in cocoa. But it's the hedgers, the producers now, that are making the speculators long rich because they're all panicking. The specs in coffee and cocoa. So this is what's going on in Brazil. Yes, the drought is easing with lots of rain, but there's been irreversible damage. And it wasn't really the last 2 or 3 weeks when the rains really started in northern Brazil and the blooms came out that we realized how bad the situation really is. Look at the trees on the bottom left there, not showing any cherries at all, and about 10 to 20% of Brazil's production having nothing, okay? Now, we also had a tropical storm that I predicted a week and a half ago, hit Colombia and Central America, causing more damage to the coffee crop. So typically, you want to see these nodes or modules on these stems during the bloom stage of at least 16 or actually more like 20 to 22 of these modules in clumps. If you look at this from some of our sources in Brazil, many of these trees have less than 12 to 16 modules. That means production is going to be 10 to 20% below trend line. Even with all this rain, coffee's been going crazy. It would go to $4 if we had a drought and hot weather. We don't. So it's making things complicated. So in that case, you got to use technical analysis. My spiders were bearish I do a weather spider for clients around the world with different criteria, markets, whether they're bullish or bearish. Once we broke above that trend line about a week and a half ago, above 260, it became bullish. A trader could have bought a breakout above that trend line and made potentially 8 to 10,000 a contract in 2 weeks, and all this talk of that, of problems in South America with the coffee crop. Look at that on the bottom left. Unbelievable. So that's the way things look right now, even with all this rain recently over at least a third of Brazil's coffee production area. How about cocoa? Once again, though the weather may improve longer term, one has to use technical analysis as well. Once we broke above that 6-month trend line in cocoa, it was a buying opportunity. All these disease issues, too much rain, trying to figure out will rain help the crop? Pod damage in October from flooding rains. Look at the stress there in red. Our sources in West Africa are saying we're not going to see recovery in cocoa production anytime soon. So how to use technical analysis in some of the present markets. We broke through resistance a week or two ago in coffee. The soybean market still looks bearish, stronger dollar and great weather in South America. Though the market is oversold right now, I don't expect a longer-term bull market because I don't see La Nina forming over the next few months. Natural gas, look at that to the right when we caught wind of this cold weather pattern last Sunday. The market exploded 15% early this week. Why did natural gas sell off on Friday? $3.50 natural gas, unless we've really eaten the stocks for 2 months, is probably way too expensive. So once all the shorts covered, the market sold off. You got to be quick. You got to be nimble. We don't have a squeeze situation in natural gas right now. If it stays cold all winter long, that's a different story. Subscribe to Weather Wealth. We'll give you the best forecasts and updates and let you teach you about option strategies and natural gas, grains, coffee, things like that. So we had a weather spider here, but basically bearish, caught this move down in soybeans again here over the last couple of weeks. So the market could be a little bit oversold. Based on the spider, technical aspects of the market, anti-herd mentality, people are heavily short. That's a +3 bullish. These scores go from -4 to +4, very bearish -4, very bullish +4. You add them all together, a -5 is still a relatively bearish score totally. And with that, on the left, my spider, based upon these score numbers, these total scores for all commodities, use options, futures, or ETFs if they're available. Natural gas right now, stratospheric warming over to the west of the North Pole. Looks like 2013 and some of these other El Nino neutral phenomenon. So we changed our forecast to a cold December. Natural gas prices were also rallying in Europe a lot because of concerns about Russian tensions and much of Europe not importing Russian natural gas this winter. But it's going to be warming up a lot in Europe. So that's going to be a drag perhaps on the natural gas market overseas if it doesn't get cold in Europe over the next 2 months. These were the models a couple of weeks ago showing in white there over much of the nation, kind of normal temperatures. Look how things changed a few days ago, which helped spike natural gas prices on Tuesday, Wednesday, and Thursday. It's the negative EPO index, folks, that we're watching. If that index stays negative because of stratospheric warming there, 30 to 50 miles up in space, if that stays negative, we could have a cold winter right through January. Look at all the snow that's going to be falling in the Northeast, maybe the best early ski season in 10 years by the early part of December. Models, we don't like believing in most of the time. Look at this to the right. For months, the European model going for a warm winter. As it turns out, it changed a little bit toward a little bit below normal here over the last week. That means you really cannot believe models. Standard GFS and European models blew the summer drought forecast last summer. We had record crops, as I predicted back in June, and we had no La Nina. So these models looking ahead longer term do not do very, very well. And that's where we come in at Weather Wealth, trying to educate you to second-guess models and trade these markets around the world. Have a great week. Thank you.